Time in the market means nothing if you're reinforcing bad habits. As you guys know, habits is very important in trading. If you're reinforcing bad habits, you're going to inevitably fail. Habits are a very important part of your trading. And shout out to Ryan Wade for this video, for this topic of this video, and for the topic of the day. I found this being very insightful, very useful, and very valuable. And credit goes to Ryan Wade once again. Time in the market means nothing if you're reinforcing bad habits. I know a golfer who plays 4 to 5 times a week, every week, and still stuck shooting in the mid 80s. The important part being the shooting, right? Still stuck shooting in the mid 80s. He plays 4 to 5 times a week, every week, and he still sucks at shooting. And that's right there. That's a lot of repetition. That's a lot of repeating, right? That's a lot of consistency. But he's still stuck. He still suck at shooting in his mid 80s. That tells you if you're reinforcing bad habits, you are inevitably going to fail. You can watch a million swing tip videos. You can join different groups and listen to everyone's opinion. You can drill really hard, bad technique on the ranges for years, and I promise you will never get better. You will never, ever. Because if you're reinforcing bad habits, you're inevitably gonna fail. That's the main thing. You're gonna fail. No matter what you do. But if you're reinforcing bad habits, you're gonna fail. If you say you're gonna wake up 5 a.m., but you don't wake up 5 a.m., you're gonna fail. Right? I know some of you guys don't need to wake up 5 a.m., but some do. If you're in New York, if you live in, in USA, and the stock market opens at 6 a.m., when it's supposed to be a chart at 6 a.m., because, you guys know the stock market doesn't actually open at 8 a.m. or 9:30. It opens right on 6 a.m. That's when people are usually, that's when the big moves happen. So if you don't wake up at 5 a.m. and if you don't wake up at 5 a.m., you're going to fail. And never going to fail. Because your setup could happen around 6 a.m. Right when it hits 6 a.m., your setup could happen. You miss your setup, and you take bad trades, and you get stopped out. So it's overall going to lead to you failing. Trading is exactly like this. You're struggling because you don't understand what trading actually is. Too many new traders think losses mean they have done something wrong. And if you're a new trader and you think you have done something wrong when you make a loss, that's actually a good thing. You're wise, you're ambitious, because as a new trader, every time you make a mistake is a good thing. Why? Every time you take a loss and you question, I made a mistake, you have done something wrong, is a good thing. It's only going to benefit you. Why? Because most of the time, if you're a beginner, you're doing something wrong there. So you need to reverse engineer the loss you had and think you have done something wrong, fix it. But you'll get to a point where you didn't do something wrong and you think you have done something wrong. So just probability loss, a probability loss. And that's easy to conquer. It's just gonna be like, okay, I did my job here. I built good habits, satisfied. I accepted the risks. I'm cold, calm, the losing streak and winning streak. I accept the loss of part of the process. I accept the risk, etc., etc. Then that loss is inevitably a good loss, and that's how you literally can conquer the I have done something wrong because of a loss. But most of the time, you're doing something wrong. Obviously, right? You cannot have this right here says, but losses are failures. They're literally part of your edge. They're baked into any statistical advantage you have in the market. So everybody has losses. Larry Williams, ICT, Romeo. Romeo does not have a 100% win rate. ICT doesn't have a 100% win rate. Larry did not have a 100% win rate. Anybody in the industry doesn't have a 100% win rate. A bank, they did not have a 100% win rate. A hedge fund does not have a 100% win rate. Any institutional trade does not have a 100% win rate. That's why you guys see banks, hedge funds, they collapse because they do not have a 100% win rate. They're no different than me and you. They just have larger capital. They're just better at marketing, right? And as you guys know, a bank and a hedge fund don't even make 15% a year, a yearly basis. Some of them do, but most of the majority don't. So this is why it's so important for you guys to know that everybody loses. That's why you see a hedge fund that recently lost 150 million. Right? If he was a hedge fund, we just trades are also all of us are retail traders. A hedge funds are retail, banks are retails, everybody's a retail. And why, if they're all retail, why is even trading existing? Right? Because the reason it's trading still exists because retails, right? The market makers need money, and the market makers are the 12 richest family in the world, which are Saudi Arabians, that's Rothschild, etc., etc. They're the market makers, right? If you go back in the history, the Rothschild caused Napoleon to lose a war and caused Napoleon to die because they bought the other war. The people the people we had war with, Napoleon. He just they bought their stocks up. They sold the stocks, bought the stocks, mess around with them. They controlled the market. Eventually, they failed, right? Because the market has been here for what? They've been here since the 1500s, so it's been a long time. So they've been controlling the market for a very long time, especially the Rothschild. They're one of the richest family in the world, and they've been alive for 1,000 years. So they've been alive for 1,000 years since the 1500s, or 1500 or whatever. They've been alive for a very long time. Over 1,000 here now, I think, pretty sure. They control the market. They have insider, right? They know what they're doing. And the way we could capitalize if everybody retail is on a pattern, logical pattern, right? That's the topic here. Logically pattern, right? OTE, ranges, CRT, dealer ranges, etc., right? Those specific logical patterns that we could use as an advantage because market, because no, history does repeat. Since history does repeat, we use that as an advantage. We take the pattern that constantly shows up over and over, like this fair value gap pattern over and over. You take that as an advantage. So that's a market maker's pattern, right? And the hedge funds, banks, they all lose money. As you guys know, when you give money, especially where I live, when you give money to the bank, they use your money to trade. So if they go collapse, you can't do nothing about the money. They literally say you put like let's just say $40,000 on the bank as a saving. That $40,000 gone already. Right when you give it to them, it's gone. Guess what? They put that in a stock market or the market. They trade the markets. They trade the markets that are not even available to the public, and they could lose that money or make that money. Right? So they take your money, they trade with it. And if they collapse, they lose. Guess what? Your money is gone. And that's usually before you even get to the bank, they'll give you a policy. And guess what? It is what it is. Your money is gone. So even the banks trade with your money. So if the bank could trade your money, why don't you trade with yourself? Why don't you trade yourself? Why do you let somebody else trade your money? What would you want somebody else to trade with your money? What would you want somebody else to use your money to trade with if you can't trust him? Why don't you do yourself? Because they were inevitably gonna fail as well. Because they're retails, right? They don't fail, but they could potentially collapse. They could collapse easily. Some of them, they over leverage too hard. They could lose everything. They have been losing what? And they have been happening several times around here. You cannot have a return without accepting the risk. They're two sides of the same coin. So you must always accept the risk. So if you're risking 2,000, if you risk right over here. If you're risking 2,000 to make 6,000, you could have a chance to lose it, but you could have a chance to win it. But over the long term, if you have the right, technical edge, you are going to win. You're going to be profitable. So inevitably, in the long term, you're gonna be profitable. Short term, you're gonna feel some sort of, short term unexpected outcomes, which it does not reflect your strategy. It's just that you have to think about the long term because short term, anything could happen. It could be a drawdown, whatever, right? Anything can happen in short term. You need to always think in a long term basis. Trading is about motivation regarding screen time. And oh my goodness, bro. I've seen a lot of people doing this shit. You guys are back for 6 hours straight. What are you doing that for? You don't need to do that. I barely even back test. I don't even tape read. If I see a move that I potentially think gonna make it, I'm not gonna tape read it. I'm gonna put my money on it. Right? I always do. If I were not to do that, I would have been streaming. I would have been doing none of this. There's gonna be no point in me doing this. It'd be a waste of time. It's about having a process that delivers favorable outcome over a large sample size over a large period of time. Get out of the Discord, stop buying accounts, learn what edges, build a process you can measure. And this right over here, you should get out of Discord. Many Discords you get out, majority you should get out, unless the Discord offers value, like our Discord. Unless they have good community, positive community, like our Discord. If it doesn't do that, then get the fuck out of the Discord. There's no need for you there. If they support gambling, they don't give you advice, they tell you bad advice. It's just if they just say SPY bye 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 bye, don't be in the Discord. Get out of there. You're gonna fail. Stop buying accounts. This is important as well. You should definitely buy accounts. You shouldn't keep on buying accounts. Buy an account. Let's just say if you're a beginner, because this one overall talks about beginners, the new traders. If you're a beginner, buy a $100 account. Like spend $100 live capital, buy that, and risks what, $1 per trade, or buy a 5K account and risks $1 trade per trade. But guess what? After a 5K account, $1 is what? Is 0.1%. So it's 91%. So you could lose $100 on the 5K challenge account. Guess what? You didn't blow the account out, because you still have to lose another $500, another $400. So you still have another 400 chance. You still have another 400 chances to improve. So I suggest always buying a live. I was buying a challenge account over a live account. If you have $100, go buy a challenge account. Because if let's just say you risk $1 per trade on the 5K challenge account, you lose 100 trades, $1. You lose that. Guess what? You didn't blow that account out. You still have to lose another $400. But if you have the live account, you blew it out. This money is gone. But the way you lose 100 trades, no. Eventually, you need to lose 400 trades for you to blow the account fully, which would never happen. Which you can definitely fix up mistakes and pass it easily. Quick little sauce on that. It's just a quick tip to most of you guys. And yes, some people are cut out for trading, and that's okay too. Yes, this is very important. If you can't accept the downs, and if you can't accept the downs, you can't accept the ups. You first need to control the downside, and the upside will do its own job. If you can't control the downside, it's not built for you. It's a very risky environment. I have lost I've turned $500 to 12,000, lost it all. I've lost 13,000 live account, and I lost 33 trades in a row. And many other things happened. I probably lost over 50,000, but guess what? When I lost 50,000, I made it all back and profit. So that's a reward. That's the outcome. In the future, I'm probably gonna make $1 million, $2 million, $3 million, $100 million, even more possibly. So, but if you can't accept you losing $13,000 like me, $12,000 like me, if you can't accept losing over $50,000 like me, then you can't accept to make it back and make more. Right? You always need to know the downside, and you gotta promise yourself that you won't quit when you lose $13,000 like me. You gotta promise yourself that you won't quit when you lose over $50,000 and losing 33 losing streak in a row. You gotta promise yourself, because when you lose a couple of trades, that gets your emotion hard. You need to be hard headed in order for that to not hit you. In order for that to not impact you. Because most trader, after losing like 10 trades, they usually quit. Majority quit. So you have to be hard-headed. You have to be, you know what I'm saying? You got to do all this crazy stuff to survive. Because if you're losing a lot of money, if you just see red, that's bad for the psychology part. Because the psychology think, yeah, I'm losing so much money. This is not for me. Simple as that. And you need to constantly lose. Learn from the mistake, lose, come in the market, lose, mistake, learn, lose, mistake, learn, next day, 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 this happens, next day this happens. You just constantly face losses, which you should always embrace. Adversity is a privilege. That's a beautiful quote right there. Adversity is always a privilege. You should be happy that you're feeling adversity, that you're having adversity, because that's the most important thing they should be feeling. Because people live their life without even living. And when you live your life is when you feel the emotion. If you feel happy, you want to feel happiness all the way. If you feel depressed, you gotta be like, okay, why do I feel depressed? And eventually, like, this solve the depressed part. What do we feel? You should be into it deeply. You feel adversity, go into it deeply and survive. And you should be well done. You should be stronger. You should be way more hard headed. You should have a tougher mindset. It should just benefit you. And especially in the early stages, you should definitely be doing that. The later on stages, if you're making a lot of losses, like 33 losing trade like me, but you're trading with way lots of capital, like $1 million capital, that's the thing. If you lose that much money, you're doing something wrong there. You need to fix that up and go on from there. But yeah, thank you for watching. Make sure you guys like, comment, share. Share on the description down below. Shout out to Ryan Wade. This is a very, very valuable lesson and it's very correct. If you reinforce bad habits, you're never gonna make it in trading. And I'll see you guys later. Peace out.